by traders, and this week we are gonna talk about trade with the chart patterns, and it's all about to train you for the professional trading skills. So let's begin off with understanding the market environment. If we're talking about any kind of trading financial market, so it's all about understand the market environment. So it includes three type of understanding. That is the fundamental analyzations, that is sentimental analyzation, and third comes the technical analyzations. So fundamental analyzations includes all the macro and microeconomics data, whereas the sentimental includes all the news came inside the market, and technical analyzation includes the technical way of analyzing the chart with the indicator, with the candlestick patterns, with the chart patterns. So we'll begin off with today's webinar with the chart patterns and how we can use that patterns to understand and take the trade. So here, when we're talking about any kind of market, there will be two kinds of market situation. The first situation where the market people will be fighting together, buyer will be pushing the market all the way up and the sellers will be pushing the market all the way up. So this buyers and sellers talks of is always going on inside the market, and when we're talking about the Forex market, it is the biggest liquidity market, and because their buyers and sellers, tons of sellers and buyers are always available 24-hour open market. So we don't need to worry about the market for the buyers and sellers. When we execute the order, it executed instantly. When we exit the order, it exits instantly. So this all is the Forex. When we talk about the buyer and seller situation, so when the buyer is dominating inside the market will be all the way up. When the seller is dominating the market will be all the way down. So based on that situation, we understand the market. Let's now talk about the two possibilities inside the market. When we are following a market, let's take in our situation, market is a bullish market. It was coming so long days up and up and up. Suddenly a price came when the market start consolidating where the price came when the market people are not able to push that up. Market trend is start to consolidation. So the upper line, which is market fearing line, we can call as a resistance line. That price line market cannot break and go up. Now the price is getting bounced off with a certain line that is called the support line over here, where the market is getting bounced back and market is not able to break and go down. So these two lines become very much important for the market, and these two lines consist of channel where the market is consolidating up and down, up and down. So for the long term, when we're talking about what is the possibility market can have, what is the two outcomes market can conceive in the long term situation. So the first case can be market break the support line and it will come down all the way where it is coming from. It has reversed to that same direction. So that situation will be called as reversal. This is called as the reversal situation of the market. Now the second situation, when can market break the line, resistance line we're talking about here, the resistance line, and it can break this line and go up, that will be called as a market continuation. Market has continued where it is coming from. So market was coming here up and market has break this resistance line and market has gone back to the same situation where it is coming from. So these two patterns are really important in the market when we're talking about. So these patterns tell you the long-term story of the market, where market gonna be continue or whether market gonna be reverse all the way. So in the situation when we see any kind of market, there will be always market will be in a ranging situation. Most of the time market will be in a consolidation up and down between a certain price range. So it can be like this down or it can be like this up channel, which we had talked about. Market can consolidate into an up channel, market can consolidate in a down channel. So this is the ranging situation. Only the 10% of the time market will reach when the market will have a breaking situation. Market can break and go up, market can break or go down. Any direction market will be reaching this situation in the 10% of the time. That is called as the trending situation of the market. Now, let's talk about how a chart pattern can help you to achieve this. So what is a chart pattern? The chart pattern is the pattern formed on the historical trend of any financial market, which help to find the reversal or continuation of the future trend movement. So what does the pattern mean? Patterns that has been formed so many times in the historical data, which has been repeated over and over, and which has shown the same kind of situation in the future trend of the market. So this pattern becomes famous, this pattern becomes classic in the market, and that once it forms in the market, people start taking the trade due to this pattern's formation. So we will be talking about the importance of the chart pattern analysis. So these are very important when we talking about the market reversal. When the market has been gone up and now it is getting reversal, that time it will be helping you a lot to understand, to get inside the trade, to enter and exit at the right time inside the trade. Easy to spot the pullback and reversal. Identify the high trend move. Identify the high trend moves means market volatility. It can give you a better clue inside the market when the market will be in a high volatility. So to help you to capture a good profitable trade. This all will be helping you inside the market. So all this we can get it from the chart pattern analysis. So this all we're gonna talk about, the chart pattern analysis. So let's talk about the chart patterns. There will be two kinds of chart patterns. There will be a reversal chart pattern, which will be help you to understand market as a reversal trend situation. Market if was coming all the way bullish, so market will be now reversed and market will be now going down all the way. So that will be called as the reversal chart pattern. If market was coming bearish, so market has consolidated and now market will reverse all the way and go up again. So this chart pattern will help you to understand this part. So there are some certain chart patterns we can get it here, and it has become so much famous inside the market that people are talking. People has been analyzed so long these patterns, and now it has become the trend for the market. When it appears, people start taking the trend. So that is head and shoulder top, head and shoulder bottom, this double top and double bottom. This all chart pattern is for the reversal chart situation, reversal trend situation. When the market has gone up and now it can reverse, when this chart pattern will be formed inside the market. When you see this chart pattern formed inside the market, that is a great signal that market will be now reverse its trends. Market has come from bullish direction, it will be bearish now. If market has come from bearish direction, it will be bullish now. So this chart pattern will take some time to form in the market, but we need to hold our trading till then it has formed completely. Once it has formed, we can get inside the trade that and there, and it will help you to understand the market situation. So this is the head and shoulder. We'll be talking about first about the head and shoulder chart pattern, so how it will be formed. So let's talk about this head and shoulder chart pattern. When market has come up all the way bullish trend and suddenly market has a little bit fall, again market has got some support and market has again bounced back to the up direction. Again market has fall till the same support line. Market has fall, again market has bounced back, and there will be some price, the resistance line which will be here, and market has reversed from that and come till here. So this become market situation now. Now you need to enter here because market will be now completely bearish trend. Market has come all the way up. Now this situation has arisen when the market has break this support line and market will be now in a bearish direction. So let's find out this pattern in our real trading platform Amplify, and also once it is forming in the bottom direction, it is called as head and shoulder bottom. So let's find these two patterns inside the market, real market, and let's see what it shows us. So to let you our trading platform. If you don't have the trading platform, you can download it here from our website AlphaBetaFX.com. If you're not registered, you can register over here, and also you can participate in our awesome promotions which is going on over here, like Alpha QB contest, demo competition where the real money will be awarded for your trading skills, live competitions where you can earn more than just your profit. So this all, if you don't have platform, you can go here in the platform section and can download the platform over here. So we have already downloaded. So we'll now open our trading platform over here. So this is our trading platform, and now let's search our pattern which we are looking still for, our pattern which we'll be searching over here in this platform. So hidden shoulder pattern which we was talking about. Let's search here hidden shoulder pattern. Okay, so this is the pattern which we was looking here. Now we had seen here the hidden shoulder pattern. See, market has been all the way down, it has gone up. Again it has come down, again market has pushed all the way up, again it has gone down. Market again tried to go up but not able to go up, and market has fall here, fall, all the way it has fall. So once this chart has formed, it has fall for the 1, 2, 3, 4, 5, 6, 7, 8, 9 candles it has formed. All the chart, all the candlestick which is here, it is belongs to 5 minutes, so we need to change it for the 1 hour at least, so that we can analyze for a longer period of time. So now find out our pattern head and shoulder over here. So we can find out in the historical data it has been formed long back. So this formation will be helping you to understand when we need to go inside the market. If it has been formed, people will be active at that particular time and there will be a trade going on. So I had taken trade over here, you can see here. This was a formation of head and shoulder. Market has gone all the way up, again it has come down, again it tried to go up, not able to break some certain line, again gone down and tried to go up, and that was the time when I entered inside the market and it has fall all the way down. So if we're talking about how much it has fall, so we need to press Ctrl F in our software and we can calculate how many hours it has fall actually. So it has fall for 11 bars. 11 bars means 12 bars. 12 bar means 12 hours. It has continuously fall inside the market, means we can capture for 12 hours a downtrend over here. So you need to train your eyes. First you have to train your eyes. If your eyes really trained, you can capture a good profit inside the market. If this formation has been done inside the market, people will be activated and they will be start taking the trade. So it will be easy to understand this pattern once you know the normal all the way of all the other chart patterns which we have to talk about today. So this was a head and shoulder pattern. Now we search if there was any other head and shoulder pattern has formed. So it has been tried a little bit to form over here, head and shoulder, but not perfectly it has been formed. So till now one we had found over here. So this was our head and shoulder chart pattern. Now we'll talk about a different chart pattern, that is double top and double bottom chart pattern. So double top and double bottom, what is the rule gonna be for this understanding this double top and double bottom? So let's assume market has been coming up all the way and market has reached to a price which is holding a very big resistance line. Market is not able to cross this line, and market when try to cross this line, once market touches this line, it falls. Again market has tried to touch this line, it has fall. So this fall will be now a situation when you need to take that profit, and this fall will be help you to go inside a sell mode if it is in the bullish direction. If it is in a bearish direction, market has come all the way down, and one support line which is very much market varying point where the market is not able to break and market is getting bounced back to the where it has been coming from. Again, there will be a resistance line where the market is falling, and again we are reaching to a support line where market is getting bounced back. So this situation we need to take the trade now. This is the point where we need to actually enter inside the trade, and this help you to capture good profit inside the market. So now let's find out the double top and double bottom situation in our real trading software. So we'll go back to our software and amplify, and let's try to search this. Let's find out. So only way to take this find out this way is train your eyes. Once your eyes is really trained, you can find out this pattern and there will be a really good profit you can capture. So here is the double top pattern. Again fall down, market has gone up, again fall down. Now see, market has fall till here. So 1, 2, 3, 4 hours market has continuously fall, market has fall, and this was a good opportunity to take the profit till here. If market we have entered here. So what is the pips it has been fall so far? We can check over here. So market has fallen to 323 points or 32 pips, 31 pips market has fallen. So this was a good scalping position we can have here. Also we can find out this pattern in our previous historical data. Let's find out. So we can see over here as well this double top situation. Here market has gone up, again came down, again gone up, again came down. Market has people now enter inside the trade and market has fall till here. So this was also a good example for the double top pattern. And market is taking the trade over here. We had scrap 24 pips or 240 points of trading. We had it over here in this market. So here like that you can find out the similar patterns for the bottom side. You can find out for the top side also you can find out, and you can go inside the trading. Now this is the bottom side pattern. Market has gone all the way down, market has gone up, consolidated, again came down. So this was the support line where the market was not able to break, and market has gone all the way up till here. So you can see market has gone all the way up. This was the support line, market was not able to break and market has gone all the way up. So this is the pattern which you need to find out inside the market. Once you find out the pattern inside the market, you can capture a good profit from the market. You can see again the double bottom pattern situation over here. Market has come all the way down, not able to break this line. Market again bounced back and gone all the way up till here. So this was a perfect W inside the market which has been formed, and people has got this made profit till here. If you had entered here in this situation, so you have got 1207 points or 221 points of 120 pips profit till here. So this is the pattern you need to find out inside the market, and then all you need to go to start trading with this patterns. So this was the example of the reversal chart pattern. Market, as I told, market has a two situation. So whoever has joined lately, you can find out this video stream on YouTube and can cover the beginning part, and then you can understand what is the reversal or what is the continuation of the market. So now we find out the reversal chart patterns. We'll talk about the continuation types of chart patterns in our next pattern classes. So this all was the reversal chart patterns. Now let's find out the continuation of the chart patterns. So the first chart patterns which show our continuation is the rectangle. Once a rectangle is forming inside the market, market will be showing a continuation inside the market. Other types are bullish peanut, bearish peanut, symmetric triangles. So this all chart patterns we will be talking one by one, and with the help of our software Amplify, and then we will train our eyes to find out inside the market. So let's talk about the rectangle pattern first. First thing first, rectangle chart pattern. So how it will be exactly forming. So let's talk about here rectangle formation. When the market will be following a resistance and support, so there will be one price when the market will be fall back and again get back, fall back and again get back in the same situation. So this will be the pattern you need to take the trade. When the market will be here, you need to enter. When the market will be here, you need to wait, and once it start falling, you need to enter. So it will be giving you a consolidation where the market pattern will be continuing itself rectangle. So let's find out this inside our platform, and let's see how much we can make a profit with this patterns. So now let's talk about this right here. You can see market has fall. There are certain prices which where the market was not able to break. Again market has get back in his direction. So again there was a price where the market was not able to break. Again it fall down, which the same way little bit down, but again market has shown a reversal kind of situation. But here you need to see market has not followed all the way up. Market has followed till this pattern. Market has followed again pull back. Market has followed again pull back. But there certain price when it tried to cross, it has reversed and go the same direction when the market was consolidating. So this is the pattern you need to find out inside the market, rectangle patterns. When you find out inside the market, you can take a good trade inside the market situation. Let's talk about the way up. This will be a good example. Yes. This is the consolidation pattern. So market was coming all the way down, which is certain level where the market was not able to break. Again it fall down, destroy it properly, so it should be easy to catch the price. So market has all the way fall down. Again market bounce back, but not able to touch this line, and again fall back somewhat, again pull back, again fall down, again pull back, again fall down. So this pattern, when we need to see inside the market, we need to check with what is the resistance line so far for the market, what is the support line going on so far for the market, where the market is getting bounce and where the market is getting reversal. That will be resistance line, this will be support line for the market. So if we need to take this trade opportunity, we need to take this exactly, we need to hold our trading position. When market is falling down, you need to hold now till here. When again market is reversing back, now go inside the market and take this profit. Again market is coming back. That situation you need to exit and go for a sell. Then again it will be reached to a line where the market will be going back for the uptrend. You need to go for the buy situation. So like this, the continuation will be forming. This chart pattern is called the continuation chart pattern. So where the market trend, it is telling that market is continuing the trend pattern. And the time when it reach here all the way down, it is here. It has reached the resistance line, and that has break here, and come all the way down. So you also need to understand the candlestick patterns. We will be talking the candlestick pattern in the next webinar. So it is for the chart pattern trading. But let me tell you one rule. The rule number one: never sell at support or never buy at resistance. Now, what is that I'm talking about? First rule, never sell at support, absolute support. If we are here inside the market, here in this situation or in this situation, and we had taken a sell trend, although we had seen here market is consolidating into between a certain price, and we had seen here market was not able to go down, market has reversed here. You are in a big loss. Market has again tried to come down, but market again reversed. Market has tried to come down, market has again reversed. So when you are trying to sell at a support, it will not help you inside the trade. Similarly, when market is in a resistance line, market has here, and you try to buy here, your money, your account will be full blow. Actually, because on the top resistance we should not buy, we should wait always to reverse the market, and we should take a sell, and market will be going till here down or here down or here down. We should not buy at the resistance line. We should always wait to reverse the market situation. So the rule always you need to remember, never sell at support line, never buy at resistance. This is the two rules we need to follow inside the market. Now, we need to find out a way. The two line is here drawn. Market is gone up all the way. Market has not able to cross this line. Market has come back, fall. It has fallen to this support line. If we change the color, it will be helpful to understand. Market resistance line is this one. Okay, market support line is this one. And market is consolidating between this pattern. So market has tried to come all the way up. Market has fall back, come down. Market has up, market has down, market has up. Market has tried this consolidation. So what I am trying to tell you is, if you had bought here, market has not able to break this price 81.8440, less than that. Market has come all the way down, market has gone. And if you had buy over here, you will be in a perfect loss situation. You not can make profit if you are buying at the resistance line. Don't buy at the resistance line, don't sell at the support line. What if you had tried to sell over here? Market has reversed and market has gone up. If your account is very low, you can not hold this all the losses and your money will be gone. Now, if you will be talking about why then we need to sell over here, because it is also crossing the support line and it is coming down, and if we not sell here, we not making the profit because market was fall after that situation. So I am telling not to sell at the absolute support or absolute resistance. Wait for one candle to be formed perfectly down. So once or two candle has formed perfectly down, now you need to take the trade entry inside the market. And you can see, if you had wait for this candle and if you had entered over here in this situation, you had captured a good profit here. But what if you had not wait over here and you sell it? So market has not gone down, market has reversed, and if your account is very low equity, your money will be completely blown. So this is, we need to have a discipline inside our trading. If you are really a good disciplined trader, you can make a lot of money over here. If you're not following your discipline, your money will be in a loss situation. Always you will be not good trader. So that is the absolute trading rules you need to follow inside the market. Now we'll talk about the other chart patterns what we have for the continuation of the trend. So we'll be having now our peanut, bullish peanut and bearish peanut chart patterns, which we need to find out. So what is the thumb rule for this bullish and bearish peanut? How we need to take this trade? So when the market is coming a strong trend, bullish trend, there will be a strong trend in the market where the market is going in one direction completely. Either it will be bullish direction, either it will be a bearish direction, but the market will be following a trend completely in a one direction. So if market is, let's talk about bullish situation. So bull has break all the support and resistance line. Bull has a still power, and bull can continue that pattern again where it is coming from. So there will be a consolidation, small consolidation will be forming over here, where the market have a pause, where the bull is taking breath, and again the market will be going the same way where it is coming from. If it is a bearish situation, so market will be falling, again the bear will be taking breath somewhere, and again market will be falling the same situation all the way down. So it will be not a big consolidation, it will be very small consolidation inside the market, not like a big consolidation. I'm talking about a very small consolidation. So let's find out this two pattern inside the real market, and let's have trade situation. Let's see. So we'll go again back to our trading platform, and we'll talk about this pattern. So I told you to find out this pattern only in the bullish or bearish market. If strong bullish pattern is arising in the market, then only you will be finding these patterns. If it is a small consolidation, don't try to find this trend. So this is the point we was talking about. So let's talk about this pattern now. Over here, market was in a bearish direction, bearish direction, bearish direction. When this peanut kind of consolidation forming inside the market, this peanut kind of consolidation forming inside the market, that is the breath of the market. Market is trying to take breath till here. Market is trying to consolidate, and market will be following the same trend which is falling, and market will be going all the way down. So this small consolidation, not talking about big consolidation, only the small consolidation market is following. This consolidation will be very much important to understand. Market has a continuation type of situation, right? So this is a big trend of fall. Let's find out our bearish peanut situation over here. So you can see here the consolidation. Market has consolidated. Market has consolidated. Again, market has consolidated. Market has consolidated. So this was a little consolidation inside the market when the market has consolidated, but market has followed the same bearish trend situation, same bearish trend situation, same bearish trend situation. So this is the bearish peanut we are talking about when it will be forming. So market will be following the trend continuation. Market, if it is falling, it will be falling if these patterns are forming. If market is bullish and if this kind of pattern form over here, market will be in a situation to continue the trend where it is all the way coming from. So this all are the bullish and bearish peanut situation which we had seen in the real market software. So now let's talk about the other chart pattern which is left in our room. So it is symmetrical chart pattern. So this is kind of biased chart pattern which we need to have a certain kind of situation consolidating between a large area market is consolidating. This symmetrical chart pattern, symmetrical triangle will be forming. This formation is a bias formation. Market can go up most of the time. Market will be following the same continuation trend, but sometimes market can also fall and reverse the market situation, but most of the time market has follow the continuation inside the market. So this symmetrical chart pattern, it is very much area will be there where the market will be consolidating, and this trend line we need to draw. Then we will find out the symmetrical triangles. Let's find out in our software, and what we're talking about will be this kind of situation. So market has Not exactly. Let's take some other way. If it is formed, if it is very perfect, then it's easy to tell you about consolidation. So let's find out a proper one. So you also can see the other chart patterns what we have learned till far. So this situation will be good to tell you about the chart pattern situation which we'll be talking about. So here market has started consolidating between a certain price trend lines. Market has started consolidating between a certain trend line. Market has gone up, market has gone down, market has gone up, market has gone down. Again, market not able to bear the situation and market has fall. So this symmetrical triangle formation is a very biased. Market can most of the time continue the trend, but market can certain time market can show a reversal as well. So it is very biased type of chart pattern where the market, if it is forming, most probability market can continue the pattern, but there is also a chance that market can reverse the pattern. Where it is coming from, market can reverse the trend. So market was coming all the way if we were talking about down. So once it has formed over there, market has now tried to reverse but not able to reverse. Market had again fall down, and market has followed the same consolidation. What market has followed the same trend what it was coming from. So these patterns are really important, and also we need to train our eyes to find out in the real market if it is forming. These are the very classical patterns which is getting followed by 1970s, 1950s, and once it forms, so market people will be very much activated in the market and they start to sell or buy the particular asset what we are talking about. So if it is formed in the market, we can find out and we can take a good trade inside the market. There are also lots of market patterns which we need to talk about, but the most classical pattern which we had talked about are the same: bullish peanut, bearish peanut, rectangles, and then head and shoulder, double top, double bottom. So also there are triple tops, triple bottom, which is the same market situation. So this is all about to training your eyes. Once your eyes is really trained, you can find out in the market. If your eyes are not trained, so please try to learn these situations. Please try to find out some practice you need to do, and once you had practice enough, you will be in a good position to take the trade inside the market. So now we have talked about the head and shoulder. Let's quick revision of all what we had talked. So we had talked about the reversal chart patterns that includes head and shoulder, bottom head and shoulder, double top, double bottom, which will be this looking like M or W shape. This will be taking so much time to form, but once we have formed, we can go inside the trade and we can capture a good trading profit. So also we had talked about the continuous patterns, which includes rectangles, which includes bullish peanuts, which includes bearish peanuts, or which includes symmetrical triangles. So we had talked about this. You need to revise it over and over, then only you will be in a good trading situation and good trading profitable trader you can have. So you need to learn this. So now we talk about very important about the risk management, and that is very important. When you are a good trader, you need to follow it very disciplined. You need to follow the trading with complete discipline. So what is this risk management? Risk management is like we need to manage our take profit and stop loss always inside the market, because market cannot be predicted consistently. So Henry Simmons has told market cannot be predicted consistently. It is all about odd statics probabilities and avoiding the risk of loom. So that means you can blow if you are not understand the discipline of the market. If you not follow the discipline, you will be not a good trader. So always do the risk management. Risk management includes control your mind first. Take out your emotions. Take out your all the emotions from your brain. Market situation you need to understand, and then you need to enter inside the market. Don't emotions let into your trade, and that will be not helping. If you are trading with the emotions, you will be not a good trader. Control your always losses. Try to take calculated risk, not like risk of full money to gain certain kind of profit. Try to take a controls calculated risk to get some profit. It is all about inside the trading. You need to take the calculated risk to gain some profit. Also, you need to manage a risk and reward ratio 1:1. Try to take the same stop loss as well as you are taking the take profit. So when I am talking about the take profit and stop loss, you can set in your software properly. In your money could be in a very big risk. So this was the risk and reward 1:1 ratio. Always try to manage the 1:1, and also try to control your emotion. That is the only way to take the trade. Try to take the risk. Only you will be learning. So if you are not taking the risk, you will not learn. Try to take the calculated risk. Try to be ready to lose something to gain something in this forex market. This is all about risk management 1:1. Also, I want to introduce you our portfolio management in the forex market. If you really want to grow in this market and don't want to lose your big money, so you can take our portfolio management, which is available free of cost. You need to open a real account. You can take this portfolio management, and there will be two kind of portfolios which will be helpful to choose with. So why we need to take the portfolio management? Because this market is very big and it includes the fundamental, technical, sentimental analyzation. Also, there is very much risk inside the market. So always you need to have a safe hand people who can trade your currency, you can trade your funds and can give you a better return. So that will be a safe side of trading. So you can take this with the portfolio management service. We have two kinds of portfolio management. One is the PAM and one is the MAM kind of. So PAM will be a fixed 5% return. If you are taking this PAM management, it will be a fixed 5% of return. If you are taking a MAM management, so it will be more than 5%, but the individual portfolio manager will be trading your equity, and there will be more risk involved inside the market, because actually it is MAM management where will be more profit you are expecting, so more risk and reward we need to manage. So this will be in a MAM situation. So these two types of trading we have till far: PAM management and MAM management. You can have any two, and you can have a good safe and profits inside the market. So now let's close this webinar today. It is enough done. And if you have now any questions, you can go ahead and ask anything. You can also write us your doubts in the email webinar@alphabetafx.com, or you can reach us on this number. You can note down this number +1 917 546 9780, and you can have any type of doubts you can ask us, and can write also in the webinar AlphaBetaFX.com email. We will be replying your doubts